Hello everyone. On the demand of my students, I have collected some sample questions for money and banking paper. This is a general elective paper for semester 3 BCom honors. Here I have collected all the probable questions from your money and banking reading. Hope it would help you in your exam preparation. There are some questions which are repetitive. My objective is to give you the idea of the questions which you can expect in the exam from different units. Along with that, I have also attached some previous year question papers. Hope it would help you in your exam preparation. All the very best to all of you. So starting with topic 1, that is money, you have to study the concept, function, measurement and theories of money supply determination. So let's find out the questions from topic 1. So from topic 1, the probable questions are: what do you understand by role or functions of money? What are types of money? Discuss the evolution of money. What are the physical properties of money? What do you understand by minimum reserve system? This is very important because minimum reserve system is the system on which the currencies are printed in our country. Next is the role of banks as a financial intermediaries. Then the important question, difference between direct and indirect finance. What do you understand by loaned up? What is monetary base? Now coming to multiplier, we have a complete deposit multiplier, complete currency multiplier and complete money multiplier. So when you study these multiplier, practice the numerical questions on it because it is a very important part for numerical question. And from these topics, you can expect short note. Next important question is discuss various determinants of money supply, where you have to study it in 3 heads: the central bank determinants of money supply, the commercial bank or the banking system determinants of money supply, or the public determinants of money supply. So either this question can come in a long question form or a short question on any one of the determinant, or it can come as a case study and you have to identify what is the determinant. Either it's RBI or a commercial bank or a public. Another important question is differentiate between exogenous money supply and endogenous money supply with the diagram. So prepare it very well. Now let us see the questions which came in the previous years. So the first question is describe 2 ways in which financial intermediaries help to lower transaction costs in the economy. Or the matching question, role of financial intermediaries. So prepare the role of financial intermediaries. Next is which approach is better for defining money, theoretical approach or empirical approach? The same question is repeated again in short note, theoretical and empirical definition of money. Next is the exogenous and endogenous money supply, very important question. Again it was repeated. The money supply is exogenous and money supply is endogenous. So you have to prepare this answer with the figure. Again it has been repeated, the second 7-marker question. Differentiate between exogenous and endogenous money supply curve. So this is a very important part of your syllabus. Prepare it very nicely. Next is what are the various determinants of money supply. So here is the question collected on the determinants of money supply and the impact of money supply. So the question says explain why the money supply might change due to the change in behavior of the commercial bank and the central bank. That means commercial bank determinant of money supply and central bank determinants of money supply. Now here some case studies are given. You have to find out its impact on money supply. The same question here also, the question you have to find out the impact on money supply, and same here you have to find out the impact on money multiplier and how it affects the money supply. Here, credit cards are offered to pay items purchased at retailing outlets. Are credit card money? Explain. So these are the numerical questions which came on currency multiplier, deposit multiplier, and complete money multiplier. So practice this question. Now again coming to the sample question of topic 1 money. Here we have to study what are the two main approaches to money stock determination. So two main approaches means the balance sheet approach and money multiplier approach. So prepare it well. The balance sheet approach, which is also called as a structural approach. Next is what is the difference between narrow money and broad money? Discuss the new measurement of money supply and differentiate between monetary aggregates and liquidity aggregates. So this is very important. This can come either in a long question or in a short note. Along with that, also remember what are the reasons which were responsible for a new measure of money supply and what do you understand by weighted monetary aggregates. So on these topics, I have created a video for your understanding. You can go through the video and try to understand these topics, but prepare it very well. These are the very important topics. Some more important questions from topic 1 are: discuss the money multiplier approach and its critique. What is reserve money? So this is very important. Either the question can come in reserve money or high powered money or monetary base. So prepare it well. What is reserve money and what are the sources of the change in reserve money? Next is what do you understand by money multiplier and what are the roles of adjustment factor in money multiplier? The question is why are three key ratios C, T and R are called the proximate determinant and not the ultimate determinant of money multiplier. So this question is from your reading. Prepare it very well. Another question is the balance sheet approach of money supply determination and what is velocity of money. So the money multiplier approach, what is high powered money, what is adjustment factor and why CTR are called the proximate determinant, not the ultimate determinant. Prepare this question very well. So let us see some previous year's question also to get the idea. So this question is on difference between monetary and liquidity aggregates. Again, you can see the question on monetary and liquidity aggregates. Again, the question on monetary and liquidity aggregates. So learn this difference between monetary and liquidity aggregates, that is a new measure of money supply, and why this new measure was introduced. Here you can see the question is on the what is the impact of CRR on adjusted reserve money. Explain with reference to the process of deposit creation. In a short note, what do you understand by money multiplier? Now let us see topic 2 where we have to study financial institutions, markets, instruments and financial innovation. So topic 2 is divided into two parts. The first part you have to study the role of financial market and its institutions, problem of asymmetric information, adverse selection, moral hazard and financial crisis, which are very important for your syllabus. And part B is talking about the money and capital market, organization, structure, reforms in India, role of financial derivatives and other innovations. So topic 2 is very important. Let's find out the sample questions which I have collected for you. So in topic 2, first we will start with asymmetric information and its type leading to financial crisis. So let's find out the important questions from here. What are the role of financial intermediaries and how it reduces the cost of transaction? What do you understand by asymmetric information and what are its types? Another important question, explain the limit problem in the stock and a bond market and how to solve it. Next, what do you understand by adverse selection and how to solve it? Important question. Next is, what is the difference between moral hazard and adverse selection? What are its solutions? How moral hazard affects the choice between debt and equity contract? So if the question is asking the problem, you have to write the problem with its solution. So some more questions from asymmetric information. What do you understand by principal agent problem and how to solve it? Discuss the moral hazard in debt contract and what are the tools to solve the moral hazard in debt contract. What do you understand by financial crisis? Explain with examples. So you have a reading. There is an example of subprime crisis and other crises. So please read that. What are the causes for financial crisis? A very important question. So all these questions are very, very important. Difference between symmetric and asymmetric information, and another very important question is discuss the problem of adverse selection in bank and suggest the bank's strategy to countering the asymmetric information. So to understand this question, I have created a video. You can see this video, importance of information and what is asymmetric information, and this question is in this video. You can see this video. It is from your reading I have created to help you to learn. Let's see some previous year's question on asymmetric information. The questions are from moral hazard, principal agent problem. The question on principal agent problem, moral hazard and adverse selection. The question on adverse selection. Question on debt contract and equity contract related to moral hazard. Then the very important question, adverse selection, how the loan of a dishonest borrower tend to subsidize by honest borrower. Tools to help adverse selection problem correction. Better credit risk do not subsidize poor credit risk when symmetric information exists. Explain. So all that is from adverse selection. What are the bank strategy for countering the problem of asymmetric information? So that is also the problem, the solution for adverse selection. Bank's strategy for countering asymmetric information. So here you can write all the solutions from adverse selection, moral hazard. Explain the various strategies adopted by bank for countering asymmetric information. So that is solution for adverse selection. Now here you can see the previous year question on financial crisis. The question is on discuss the condition that lead to the current banking crisis of 2008. So this is basically a financial crisis related to the subprime crisis. Factors causing financial crisis. Again discuss the major factor causing financial crisis. So you can see it is a question which is in a long note. What is the genesis of typical financial crisis again, and rationale for the government to regulate the crisis? This is the question again on financial crisis. So prepare the financial crisis topic very well. What are the financial crisis, how it caused, and what are the case studies given in your reading related to financial crisis? So now coming to part B of topic 2, which is on reforms in money and capital market and derivatives. The first question is need for financial sector reforms in India and name the committees associated with these reforms. So if you go thoroughly with your reading, there is a topic on non-performing asset. There also the committees name are mentioned, that Narasimha Rao Committee, Sukhmoy Chakravarti Committee, and the financial sector reforms of 1991. It is there in your reading. Then what are treasury bills and what are the reforms done by the government in treasury bills? This is also very important. It came many times in the exam. Then short notes on ways and means advances, CRR and SLR, NBFC, liquidity adjustment facility. So this is very important because nowadays RBI is focusing on liquidity adjustment, short run, that is comprising of repo and reverse repo. So prepare all the probable questions from liquidity adjustment facility, how it is related to MCLR and how is related to the change in the repo and reverse repo effects on liquidity on the market. Then open market operation, bank rate, FII and DII and DTL as SEBI, market stabilization scheme, Securities Contract Regulation Act, RTGS, CCIL and FERA and FEMA. Now coming to the previous year's questions again, you can see the questions are on financial reforms introduced in 1991. Then discuss the features of the balance sheet of Reserve Bank, explain the impact of economic reform undertaken in 1991. Here again, various pros and cons of deregulation of saving bank deposit interest rates. So this is the part of the reform. Benefit of international portfolio diversification, reduce the lending rate of the bank. The central bank lowers the saving and time deposit rate and fix it below the equilibrium. Will the above policy be successful? So these questions are on the reforms of the market. So coming on to the derivative of topic 2 or unit 2. So first is what are derivatives? Explain its features and its types. Explain the role of futures in financial markets. Difference between future contract and forward contract, a very important question for money paper. Difference between futures and options. So prepare this question very well. Difference between future or forward or difference between future or option. What do you understand by short position and long position future contracts? Role of clearing house. What is leveraging aspect of future? What do you understand by margin requirement? So all these topics are very, very important. Margin requirement, leveraging aspect in future, clearing house, short position and long position in future. So for this topic, you can see the video derivative part 1 where I have explained what are derivatives, its features and types, and part 2 where I have given a detailed explanation between the difference between forward and future. I have also talked on clearinghouse role, leveraging aspect of future and margin requirement. So all you can get it from this video. Try to understand it and learn it very nicely because these are very, very important questions. So next is what do you understand by option contract? Discuss the economic role of options market. What is the difference between American option and European option? So this you can get it in the reading. American option are the options which are exercised anytime on or before the expiration date, and European options are exercised only on the expiration date. Remember it. Discuss the risk and return characteristics of the option. So this is the detailed explanation in your reading with the example and the figures explained on it. Explain how the short call is a mirror image of long call and explain how short put is the mirror image of long put. So get hold of all these concepts: short call, long call, short put and long put. Numerical question can also come on this, but more chance of coming the theoretical questions of on this topic. Difference between options and futures and how future contract help in hedging the risk. And the last is what is interest rate swap, risk and return characteristics of swap. So in interest rate swap, you have to study the fixed and a floating interest rate and how you use the swap when the interest rate goes against you. So for understanding of this options, I have again created a video on options where I have explained all these concepts. So if you want, you can learn it from there also. And for understanding the concept of hedging, I have created a video on hedging. So you can see from the channel, YouTube channel, if you want, you can see these videos to get the practical understanding. I have given the case study to make you understand easily what is the importance of hedging and how future market helps in hedging the risk. So coming on to the previous year's question. So first question is, what are financial derivatives? Are options contract more attractive than future contract? What is the difference between future and options in terms of hedging risk? What is the difference between future and forward? Option contract differ from future contract. Now here comes a long call position offers potentially unlimited gain if underlying asset price rises. So you have to prepare yourself for all the four future positions. Then explain the profit and loss profile of long call option. Discuss the role of margin requirement, another very important question in future contracts. It is also given in the reading. I have explained it very nicely in the videos also. Explain why you agree or disagree with the statement. Buying a put is just like short selling the underlying asset. You gain the same thing from either position if the underlying asset price falls. So if the price goes up, you have the same loss. So this is the case of shorting. When you expect the market to fall down, you take a short position, you sell the underlying at a high price and wait for the price to fall down. And when the price falls down, you buy it again. So that is your profit. And the profit of short selling is always in the negative figure. That means that is your profit which is going in your pocket. Since you are selling it at a high price, suppose you sell something at 1800 and you buy it at 1000, so your answer will be negative. So that is your profit in short selling. Now the role of clearinghouse, which is also very important part of future market. Now in topic 3, you have to study the interest rate determination, sources of interest rate differentials, theory of term structure of interest rates, and interest rates in India. So let us see sample questions on topic 3 related to interest rate. The first question is, discuss the theories of term structure of interest rate. Next is, the expectation hypothesis and segmented market hypothesis are actually the extreme version of preferred habitat hypothesis explained. So this is very important. Explain why. The expectation hypothesis, the term premium is zero, and in segmented market hypothesis, the term premium is infinite. What are the reforms brought in the bank's lending rate system? So this is related to the MCLR. What is the difference between base rate system and MCLR system? Explain how MCLR helps RBI short-term liquidity management and what is its impact on home loan. So in the given scenario, RBI is talking about the short-term liquidity management with its changing in repo and reverse repo, and that is related to MCLR, marginal cost lending rate of bank. So we can expect question from this topic. It's very important. For your understanding, I have made a video on term structure theory of interest where I have covered all these questions, all the 3 questions in this video. And for bank's lending rate system, I have created a series on this bank's lending rate system where I have created a separate videos on prime lending rate, benchmark prime lending rate, base rate system, and MCLR system to explain it in detail. And I've also explained the impact of MCLR on home loan borrower and how it helps in short-term liquidity management of RBI. So you can see this video and understand the MCLR and the reforms in the bank lending rate system. Coming on to the previous year's question, you can find that preferred habitat hypothesis is a very important question which came many times in the exam. The numerical question also comes from this part, and you are supposed to answer the shape of a yield curve from the given numerical question. So here also all the numerical questions on the preferred habitat hypothesis. Now coming to topic 4, you have to study the banking system. This topic is divided into two parts. Part A, you have to study balance sheet and portfolio management, and part B, you have to study Indian banking system, changing role and structure, and banking sector reforms. Now coming to the sample questions from topic 4, where you have to study the non-performing asset and banking sector reforms, which is primarily focusing on Basel norms. So the questions are: focus the light on non-performing asset in Indian banks and the lessons and policy recommendation to correct it. Next is explain how banks and bankers have been at the heart of the crisis of 2008. So from question number 2, I have collected the important lines from the Reading Basel Norms 3, which is basically a question by Subbarao. So the major objective is to focus those important lines for you to prepare those lines for the probable questions. Next is the main charge against Basel III is that it is precisely the risk sensitivity that made it bluntly pro-cyclical. Explain. Basel III did not bring in corresponding changes in the definition and composition of regulatory capital to reflect the changing market dynamics. Explain. Why Basel III failed to promote modeling framework for the accurate measurement of risk and to demand sufficient loss absorbing capital to mitigate that risk. Basel III did not explicitly cover liquidity risk, since liquidity risk, if left unaddressed, could cascade into solvency risk. This proved to be the undoing of virtually every bank that came under distress in the depth of the crisis. Explain. How Basel III is an improvement over Basel II. Explain. Basel III is not a negation but an enhancement of Basel II. Will Basel III hurt the growth and profitability of the bank? Why the Reserve Bank has prescribed higher capital and leverage norms for Indian banks than Basel III minimum. India has not been an outlier in prescribing higher capital standard. Several other Asian nations have proposed higher capital adequacy ratio under Basel III. Explain. What do you understand by counter-cyclical capital buffer, and what are the potential challenges suggested by Basel III in implementing the counter-cyclical capital buffer? And a short note on GSIBs, DSIBs, higher loss absorbency capital standard. What is mortgage-backed security? What do you mean by securitization? And what is modified duration? Coming on to the previous year question, you can see that various questions were asked on Basel III in different years. So here you can see the cost of Basel III will outweigh the benefit in India. How Basel III and enhancement over Basel II. Explain the advantages and disadvantages of adopting Basel III. The cost of Basel III will outweigh the benefit in India. Again the same question. Next is explain the various implications of Basel III on Indian banks. How is Basel III is enhancement over Basel II? Again the same question is repeated. Next is the question on non-performing asset. Compare and contrast two high bank non-performing asset episode describing the macroeconomic and institutional differences and similarity across both the periods. Next is on asset securitization. There are two questions on asset securitization. Coming on to the last topic, topic 5, which is on central banking and the monetary policy. Here you have to study the functions, the balance sheet goal, target, indicator and instruments of monetary policy, the monetary management in open economy, and the current monetary policy of India. Now let us see the sample questions from topic 5, which is on central bank and its monetary policy. So the important questions are, what are the targets and the instruments of monetary policy? So these questions you have been studying since your school days. Next is, what is the trade-off between the objectives or the targets of monetary policy? So I have discussed this question also in my video. You can go through it. What do you understand by counter-cyclical monetary policy? So this is very important. Counter-cyclical monetary policy means if there is inflation, how monetary policy will react to control the inflation. In the inflation, RBI will try to reduce the money supply by increasing the rates. By taking the contractionary measure, the rates will increase. And if there is deflation, the prices are falling, then RBI will pump in liquidity, so it will take an expansionary monetary measure. So that is counter-cyclical monetary policy. Next is, explain the difference between short run and long run aggregate supply curve. So this is also a very important topic. In the short run, the aggregate supply curve is upward sloping because you can increase the supply of land, labor, capital, enterprise, but in the long run, it cannot be increased. So you have to show it with the help of figure. In the long run, an output target is quixotic goal for monetary policy explained. So this question is also from the reading, inside the reading. Next is, Tinbergen claimed that it is not merely the number of instruments that is important, but the number of instruments exerting independent effects on the target variable explained. So for these topics, I have created a video. This can help you in understanding of this topic. Along with that, my second video is on the monetary policy target, that how it missed both the price target and income target and settles at an intermediate point where it missed both the target but by smaller amount. So this is very important. This question generally comes in the exam. Prepare it well. You can see the reading and with the videos for your understanding. Next is, explain the difference between interest rate and money as an intermediate target and which one would you prefer. Either it come in this form or a separate questions for both. Explain the monetary aggregates as an intermediate target, explain the interest rate as an intermediate target, and case for and against it separately. Next is, what are the problems of monetary policy making? Now the short notes on monetary policy lag, conflicting goals of monetary policy, interest rate targeting, inflation targeting, credit targeting. What are the challenges of liquidity management, RBI balance sheet, liquidity adjustment facility which comprise repo and reverse repo, difference between bank rate and repo rate, inflation expectations, and challenges of liquidity management. So for monetary policy lag or problems in monetary policy making, you can see this video, monetary policy lag, where I have discussed all the problems related to the monetary policy making. So coming on to the previous year's question, you can see that some questions are repeating many times, that like question on the interest rate target and money stock target as an intermediate target. Here again, Differentiate between the money supply and the interest rate target and intermediate target. What properties should the variable have to serve as an intermediate target? Here again, the conflict between interest rate and money supply as an intermediate target. Which of the two do you think is better and why? Now, the next is, in the long run, the output target is quixotic goal for the monetary policy, but price level target is achieved. This I have explained in my video also. It is not merely the number of instrument that is important, but the number of instrument exerting independent effects on the target variable. Explain the statement. Now, this is on the lags in the monetary policy. This question, implementation lag and effectiveness lag, two lags, and here the lag in the operation of monetary policy. Coming on to the intermediate targets of monetary policy, what properties should variable have to serve the intermediate target? So again, this question is repeating here. Then coming to this liquidity adjustment facility question on LAF. By choosing an intermediate target, the central bank conferred upon the choice of achieving either the monetary target or the interest rate target. So again, it is talking about the intermediate target. So please be prepared with the intermediate target, the interest rate and money stock target, and the monetary policy lag, and in the long run, output target is quixotic goal for monetary policy. These are the very, very important questions from this chapter. So coming on to some more questions, again the intermediate target, the question on intermediate target, interest rate target and money supply target. These questions are repeating every time. The monetary policy transmission, interest rate and money stock target as an intermediate target. Again, the same question is repeating. Long run price target can be met, but long run output target cannot be met. This question again. Again, the discussion on the problems of monetary policy making faced by the monetary authority. So basically, it is talking about the lags in monetary policy. Then open market operation of monetary policy, asset securitization. Then central bank choose the monetary aggregates. Can central bank choose the money aggregate as an intermediate target? Points in favor and against the monetary aggregate as an intermediate target. Now some more questions from central bank and its monetary policy. Difference between money market and capital market. Role and instruments of money market. Explain the functions or the role of RBI in Indian banking and financial system. What are the instruments of money market? Explain the role of RBI in control of credit and management of liquidity and inflation in the economy. A very important question. Next is explain RBI quantitative, a general method, and qualitative and selective methods of credit control. What is liquidity adjustment facility of RBI and its experience of market stabilization into 6 sets of roles. Explain. So this is very important. It is given in your reading. Prepare it very well. So another important question is, what is the consumer price inflation target set by the Government of India and what is the limit of tolerance band for inflation target prescribed for India? So we all know that the inflation target for India is 4% with +2 and -2, the upper and the lower band. That is the limit of tolerance band for inflation target prescribed for India. Now, India is not only country to fix the inflation target. There are many countries which have already fixed the inflation target prior to India. You can see the list of these countries in the article written by Professor Pamidua on Monetary Policy Committee report. Next is, what are the features of multiple indicator approach and augmented multiple indicator approach? So there was a question on multiple indicator approach in the exam also. Next question is, what is Monetary Policy Committee composition, monetary policy framework and voting power? So till date, there are two Monetary Policy Committee, MPC 1 and MPC 2. So learn their compositions. Discuss the monetary policy transmission framework. Difference between conventional and non-conventional monetary policy measures. What are the main features of Monetary Policy Framework Agreement? What do you understand by interlinkage between financial and economic cycle? Difference between frictional and durable liquidity, another important question. And what is weighted average lending rate? So all these questions are the questions on monetary policy in India at present. So these are the important questions for your paper. Prepare it well. So now I wish you all good luck on your exam. Give your best shot on it. I'm confident that you can make it. My best wishes are with you. Thank you so much.